With all the buzz around crypto these days, it's hard to know what to believe. Right now, it's a $1 trillion market.
Trillion with a T. That's insane. But it's also incredibly volatile.
That's the thing. One minute it's soaring to new heights, the next it's plummeting back down to earth. It's enough to make your head spin.
Definitely not for the faint of heart. But it's that volatility that also makes it so alluring for some. The potential for massive gains is hard to resist.
Right. It's like the Wild West of finance, taking power away from traditional institutions.
Exactly, putting control back in the hands of the people. And then there's the speed and efficiency of transactions. Compared to traditional banking, crypto can be lightning fast.
And don't forget the potential for financial inclusion, bringing people into the system who've been shut out of traditional banking.
Yeah, that's a huge one. Giving access to financial services to those who need it most. It's a game changer. Those 2022 crypto crashes are still fresh in a lot of people's minds.
It was a brutal reminder of how risky this market can be. Governments are scrambling to figure out how to handle this whole crypto thing. It's uncharted territory.
Yeah, China's crackdown on crypto is a major moment. And here in the US, we're seeing discussions about central bank digital currencies, CBDCs.
CBDCs. It's like governments are trying to create their own versions of cryptocurrency.
Exactly. It's a way for them to exert some control over this decentralized world, but it also raises some serious privacy concerns.
Yeah, imagine a world where every transaction you make is tracked by the government. It's a little Big Brother-ish, isn't it?
Definitely something to think about. Okay, so we've got the lay of the land. Now let's zoom in on Bitcoin specifically. That Investopedia article is all about what the next decade holds for the king of crypto.
And they argue that the next 10 years will be make or break for Bitcoin's mainstream adoption.
It all comes down to whether it can overcome some serious challenges. And one of the biggest hurdles they highlight is kind of ironic. Bitcoin was supposed to be all about decentralization, right? But it's actually becoming more centralized.
Wait, what? How is that possible?
It's happening on two fronts. First, in terms of who holds most of the Bitcoin, and second, in terms of who controls the mining power.
So the very thing that made Bitcoin so revolutionary is now becoming a problem.
Exactly. It's a fascinating paradox. The article dives into the details, but the bottom line is that a small group of players are gaining more and more control.
That doesn't sound good. It undermines the whole ethos of Bitcoin, doesn't it?
It definitely raises some concerns. And there's another interesting wrinkle the article mentions. These halving events.
Halving events. Tell me more.
So every 4 years, the reward that miners get for adding a block to the blockchain is cut in half.
So the supply of new Bitcoin is constantly shrinking.
Exactly. And that's built-in scarcity is designed to drive up the price.
It's a clever idea, but it also contributes to Bitcoin's volatility.
No doubt. These halving events are like mini pressure cookers for the market. Every 4 years, anticipation builds, and then boom, the price either explodes or crashes.
It's a high-stakes game for sure. Okay, so we've covered the current state of crypto and zoomed in on Bitcoin's challenges. Now let's shift gears and talk about the really mind-blowing stuff.
You're talking about the blockchain revolution. The Economist video takes us on a wild ride into a potential future where blockchain goes way beyond just money.
A world where it's the foundation for a whole new internet, Web 3.
That's right. A decentralized internet where you own and control your data, not corporations.
Talk about a radical departure from the data-hungry world we live in now.
It's a game changer. Imagine logging into websites with your personal blockchain wallet. No more tracking cookies, no more data harvesting.
It's like taking back control of your digital self.
Yeah.
Your data, your rules.
Exactly. And it all stems from the ideals of the cypherpunk movement. A group of privacy advocates who saw the potential dangers of the internet way back in the 90s.
They were ahead of their time, weren't they?
Big time. They were fighting for digital rights before most people even knew what those were.
And now their vision is starting to take shape with Web 3. It's amazing how things come full circle.
It is. But of course there are challenges. Security and privacy concerns still need to be addressed.
Right. Even though the blockchain itself is secure, there are still vulnerabilities in the system.
And the whole concept of Web3 is still pretty abstract for most people.
It's like the early days of the internet. All very clunky and confusing.
But that doesn't mean it won't change the world eventually, just like the internet did. Lots of questions and no easy answers. That's the crypto world for you.
And speaking of questions, remember those central bank digital currencies, CBDCs? The CFR report touched on them.
Oh yeah, CBDCs. It's like governments are trying to get in on the crypto game.
But the report presents them as both a potential solution and a potential problem. It's a bit of a head-scratcher.
Yeah, it's a double-edged sword. On one hand, CBDCs could streamline transactions, make them faster and cheaper, especially for cross-border payments.
And they could give people without bank accounts a way to manage their money digitally. That's huge for financial inclusion.
Right, it could level the playing field, but the big question is privacy.
Yeah, that's what worries me. Imagine a world where every dollar you spend is tracked by the government. It's kind of creepy.
It's a trade-off, convenience and efficiency versus privacy. It's a debate that's just getting started.
Okay, so we've got governments trying to figure out their role in the crypto world. Meanwhile, Bitcoin is facing its own set of challenges. Remember that whole centralization issue?
Oh yeah, that's a big one.
Yeah.
The Investopedia article really digs into the details.
And it's happening on two fronts.
Right.
Who owns the Bitcoin and who controls the network?
Exactly. On the ownership side, we're seeing a concentration of wealth. A small number of whales are gobbling up more and more Bitcoin.
So it's like the rich get richer,
Yeah.
even in the decentralized world of crypto.
Kind of ironic, isn't it?
Yeah.
And it raises questions about whether Bitcoin can truly achieve its original vision of a peer-to-peer financial system.
If a few powerful players end up controlling most of the supply, that doesn't sound very decentralized.
Exactly. And then there's the issue of mining, which is how new Bitcoins are created and transactions are verified.
Right. It's all about solving complex mathematical problems. And the miners who do it get rewarded with Bitcoin.
But here's the thing. Mining has become so competitive and resource-intensive that it's no longer feasible for individuals to do it on their own.
So you need specialized equipment and a ton of computing power.
You got it. And that's led to the rise of these massive mining pools where lots of miners combine their resources.
So instead of thousands of independent miners spread around the world, you've got a handful of mega pools calling the shots.
That's the trend. And according to the article, just 3 mining pools control over 80% of the network's hash rate.
Hash rate. Remind me what that is again.
It's basically the total computational power dedicated to mining Bitcoin. If those 3 pools decided to collude, they could theoretically manipulate the blockchain.
That sounds dangerous. What could they do?
They could double spend Bitcoin, which is supposed to be impossible.
Double spend. How does that work?
It means spending the same Bitcoin twice, basically rewriting the transaction history.
So all the security and trust that blockchain is supposed to provide could be undermined if too much power ends up in one place.
Exactly. It's a risk that the crypto community is very aware of.
Okay, so we've got centralization on the ownership side and the mining side. What about those other challenges the article mentioned, like scalability and security?
Those are still major hurdles for Bitcoin. Scalability is all about how many transactions the network can handle per second.
And as more people use Bitcoin, the network gets slower and more expensive.
That's the problem, and it's a major bottleneck for mainstream adoption. There are solutions being developed like the Lightning Network.
The Lightning Network, what's that?
It's a second-layer solution that basically acts as a fast lane for transactions, but it's not without its trade-offs.
What do you mean?
Some argue that it compromises security and decentralization. It's a constant balancing act.
Okay, so scalability is a work in progress.
Yep.
What about security? I mean, we hear about crypto hacks all the time.
Right. But it's important to remember that the blockchain itself is incredibly secure. It's very difficult to hack or tamper with the chain.
So where's the weak link?
It's often the human element, people losing their private keys or exchanges getting hacked.
So even if the underlying tech is solid, there are still vulnerabilities.
Yeah, user error and third-party risks are major concerns, and that's where regulation comes in.
Regulation.
Mm-hmm.
The elephant in the room.
Mm-hmm.
What does the Investopedia article say about the regulatory landscape for crypto?
It's basically a constantly evolving Wild West. Governments are trying to catch up, but there's no clear consensus on how to regulate this new technology.
It's like trying to fit a square peg into a round hole.
Yeah,
Crypto doesn't really fit into existing regulatory frameworks.
exactly. And that creates both challenges and opportunities. The lack of clarity can stifle innovation, but it also allows for experimentation.
It's a classic tension between fostering innovation and protecting consumers.
Absolutely. And the article highlights some specific regulatory developments, like the approval of Bitcoin spot ETFs in the US.
Spot ETFs.
Yeah.
Tell me more.
They're basically investment vehicles that track the price of Bitcoin. They make it easier for everyday investors to get exposure to crypto.
So that's a step towards mainstream adoption.
It could be. But there are also court cases that are shaping the regulatory landscape.
Oh, yeah. Like the SEC's case against Ripple.
That was a big one. The judge ruled that XRP was a security when sold to institutional investors, but not when sold on public exchanges.
So some cryptocurrencies are securities and others aren't. It's confusing.
It is, and it's creating a lot of uncertainty for the industry.
And there was that other case about insider trading in crypto.
Right. Even though cryptocurrencies might not always be classified as securities, the laws against insider trading still apply.
So the legal system is catching up,
Yeah.
even if the rules are still being written.
It's a game of cat and mouse.
Right.
But the bottom line is that regulation is going to play a huge role in shaping crypto's future.
Okay, so we've got governments figuring out how to regulate. We've got Bitcoin battling centralization and scalability issues. What else?
Well, we haven't talked about those Bitcoin halving events in detail yet.
Oh yeah, those still feel a bit mysterious to me. Why are they such a big deal?
They're basically a built-in scarcity mechanism. Every 4 years, the reward that miners get for adding a block to the blockchain gets cut in half.
So it's not based on a date, but on the number of blocks mined.
Exactly. Every 210,000 blocks to be precise, and this keeps happening until all 21 million Bitcoins are mined.
So it's like a countdown clock for Bitcoin's supply.
And the idea is that by making Bitcoin more scarce over time, it will become more valuable.
And historically, that's what's happened. The prices spiked after each halving.
That's the trend.
Yeah.
But the article cautions that there's no guarantee it will always be the case.
Right, past performance is not indicative of future results, as they say in the investing world.
Exactly. There are so many factors at play: market sentiment, regulation, technological advancements.
So the halvings are just one piece of a very complex puzzle.
And speaking of complex puzzles, let's circle back to that mind-blowing concept of Web3 that the Economist video explored.
Oh yeah, Web3. A decentralized internet where you own and control your data. It sounds amazing, but also a little hard to grasp.
It is a radical idea, but it's gaining traction. Imagine logging into websites and apps with your blockchain wallet.
So instead of having accounts with all these different companies, my data would be stored in my own personal wallet.
Exactly, and only you would have the key to access it.
That's empowering. No more data breaches, no more targeted ads.
It could fundamentally change the way we interact with the internet, and it has the potential to create a more equitable and transparent online economy.
Okay, I'm intrigued. Give me some examples. How would businesses make money if they can't collect and sell our data?
There are lots of ideas being explored. One is that users would pay directly for the services they use.
This is like a subscription model for the internet.
It's one possibility. Another is that users could actually earn money by sharing their data selectively.
So instead of our data being taken from us, it would be an asset that we control and can profit from.
Exactly, it flips the power dynamic. And then there are these things called decentralized autonomous organizations, DAOs.
EAOs, what are those?
Think of a company run entirely by rules encoded on the blockchain. No CEOs or managers calling the shots.
Whoa, that sounds like something out of science fiction.
It's a radical concept, but it has the potential to create more transparent and equitable business models.
So we've got subscription models, data marketplaces, DAOs. It sounds like the Web3 space is buzzing with innovation.
It is, but it's important to remember that we're still in the very early stages.
Right. It's easy to get caught up in the hype, but we need to be realistic about the challenges too.
Absolutely. The Economist video highlighted some serious security and privacy concerns.
Yeah, like the fact that blockchains are transparent.
Yep.
Anyone can see the transaction history of a wallet address.
That's right. So
Yeah.
even if my name isn't attached to my wallet, someone could potentially figure out who I am. It's a concern. And there are also risks associated with losing your private key. If that happens, you lose access to your data.
It's like losing the keys to your digital kingdom.
Exactly. And because it's decentralized, there's no central authority to turn to if something goes wrong. You're responsible for your own security.
It sounds like Web3 requires a whole new level of digital literacy and awareness.
It does. And that's one of the biggest challenges to widespread adoption.
Not everyone is going to be comfortable with that level of responsibility.
True. But as developers create better tools and interfaces, and as education and awareness grow, Web3 will become more accessible.
It's an evolution, just like the internet itself.
Exactly. The Economist video highlighted something that really caught my attention: the fact that crypto is going global.
Oh yeah, I remember that. They mentioned Nigeria as one of the biggest adopters of cryptocurrency.
It's not just a Silicon Valley thing anymore. Crypto is finding a foothold in emerging markets all over the world.
That's fascinating. Why is that? What's driving this adoption in places like Nigeria?
Well, for one thing, many of these countries are facing economic instability, high inflation weak currencies. People are looking for ways to protect their savings.
And crypto can offer a hedge against inflation.
It can. especially stablecoins, which are pegged to the value of a stable asset like the US dollar.
So it's like a safe haven in a volatile economic environment.
Exactly. And then there's the issue of financial inclusion. In many developing countries, people don't have access to traditional banking.
So crypto gives them a way to participate in the global economy.
Exactly. They can send and receive money, make purchases, even invest, all without needing a bank account.
It's like bypassing the gatekeepers of the traditional financial system.
And that's a powerful use case for crypto.
Thanks for joining us on this deep dive into the world of crypto. We'll see you next time.